Hello, welcome back to the channel. My name is Wajaha and this is the 0 to 6 figure series. Now for those of you new here, this is episode 10 and this is the series on YouTube where I go through my portfolio over time, and you'll see that we've gone from episode 1 all the way through to episode 9 and this is episode 10. Now one thing that I don't think I made particularly clear was that in this episode I'm not just taking $500 and kind of converting that into 100,000. That would be pretty crazy if I could do that, but what I'm doing instead is actually adding to my portfolio, adding cash and kind of just growing my portfolio generally over time as I dollar cost average into the market. And I think one of the things that I probably didn't make very clear here is kind of how much I've invested so far. So I'm going to try and do that today. And yeah, let's get straight to it. There's going to be three things that we're going to talk about today. Number one being the market as a whole and just kind of looking at some technicals. Number two, talking about the new asset that I've added to the portfolio. And number three, talking about the various different sectors in crypto and kind of how I'm allocating towards them all. So there's three things to jump into today. And yeah, let's talk about the portfolio to begin with. So currently at $12,838, we have profited around $7,500. And ultimately that means that we've invested about $5,250 as of today. So that's how much we've invested, and I'll try and make some sort of system where you guys can see kind of every episode how much I've invested, how much that has changed from week to week, from month to month, etc. So yeah, $5,250 invested. We're up 7,500, so our portfolio today is worth around $12,800. And recently the market has gone down a little bit, and so we have got a little bit more red across the market. I mean, we're down quite bad on some of these altcoins, these low market cap altcoins, but not to worry. You come for the volatility. Sometimes they're up, sometimes they're down, but ultimately you're betting on, or you're trying to bet on the winners here. So yeah, it's bound to happen really, especially when you go to sub $100 million or sub $50 million market cap altcoins. It's bound to happen. The portfolio hasn't really changed too much from last episode, other than the fact that we've added a new altcoin, Y2K. You might even see on my chest I've got the Y2K merch on at the moment as well, and we're going to talk about that later as the second part of this episode. So the first part of this episode, really, I just want to talk about price action. And I thought, what better way to do it than to just go to the charts themselves. And this is the chart for Bitcoin. And now most of you will know that, I'm a fundamental investor. You've seen my deep dives on the channel. I do as much research in depth as possible, looking at the metrics, the on-chain analysis, looking at products, cash flow, and real products that, drive revenue, and that's kind of what I'm interested in, and for the deep dives you'll see that I go into a lot of that, but I think it's also important to look at technicals as well as kind of macro and various other aspects as well. You've got to take all of it into a whole when you're kind of deciding when to buy and when to sell out of positions. And one thing that like I said, I'm not really a trader, but one thing that I've kind of learned about is basically just looking at things in ranges. And one thing that I've seen is that Bitcoin has been, or the crypto market asset class has been, in this kind of range from the lows of the market, well, in the entire bear market really, from May last year to now. We've kind of been in this range that you can see here, from this lower line here, I mean we've had some deviation here, to this upper line here again where we've had some deviation here as well, and ultimately we've been in this range, from the bottom here to the top here, and I think we could probably continue to be in this range. I mean, it might even extend up to the top orange line that I've drawn out here, but whilst we're in this range, I mean, there's nothing really to get too bullish about, in the sense that I don't think that we've got an upcoming bull market anytime soon. Perhaps in a year's time that might change, but for the time being, in the coming months, I don't think that's going to happen. And so ultimately what I'm waiting for is basically for prices to come back into this kind of bottom area of the range where, I've put my target. When hopefully, if it does, I'll have a chance to accumulate more of the assets. But ultimately, as long as price action is in this range, I'm happy to keep accumulating. And the same thing can be said for other charts as well. So we'll have a look at Ethereum now. It might look a bit congested, and I have got a lot of lines and stuff going on here, but again, ultimately I think we're in a similar pattern here. We're kind of in this range, and I'm perhaps some deviation above here, but the white really just showcasing the current bear market that we're in. We've been from the bottom white line to the top white line. In price action has been in this range, and I'm hoping that price action can kind of come back to this lower bound of the range. And if it does, then I will be accumulating more. I mean, if it doesn't, I'm still going to accumulate, but I'll increase the amount of allocation I'm doing when price action is at the bottom of this range. I mean, if we look at other altcoins like Matic as well, look, we've been in this range from bottom to top with some deviation on the top. Look, as long as if price action comes down into this bottom area here over the coming months, I will be happy to accumulate more. And to me, it doesn't seem like we're going to the top of these ranges anytime soon, just with how things are looking, the global macro, and just obviously from a technical perspective too. We do have some altcoins, however, like FXS, which is one of the largest holdings in the portfolio, which did actually break through the range, and you can see we're kind of just at the top of it again. So again, I'm not looking to accumulate anymore whilst we're at this position, but if we were to go back into the range, into this area of accumulation, again, I will be interested in accumulating more. And I think what you've got to do is really just, first of all, figure out which of those altcoins or crypto assets that you want to have in your portfolio, and then just find the right area for accumulation. And when price action does get into that area of accumulation, dollar cost average in. So that's pretty much my plan for the time being. I've got a watch list of hundreds of alts here. I say hundreds, they're not really hundreds, but quite a few that I keep a close eye on. And ultimately, I'm just waiting for the right time. And as you can see in the portfolio, every episode, we're still buying more assets. So we're going to continue with that. Going back to the portfolio, you'll see that we've added right at the bottom, we've got a small position in an altcoin called Y2K. And Y2K Finance is a platform on Arbitrum, or protocol on Arbitrum that I've talked about on the channel many times before. But they have a very interesting product, and we'll head over to the Y2K platform right now. And they have this really interesting product where they basically allow users to buy or sell insurance on crypto assets, depegging, and they have a variety of stable coins like Frax USDT, USDC, DAI, LUSD, BUSD, and they even have other kind of pegged assets like Lido, staked ETH, Bitcoin, and various other assets like that. So you can buy insurance or sell insurance for those assets losing their peg. Or keeping their peg anyway, and every week they have these epochs. People deposit on the risk side, people deposit on the hedge side, and obviously this is kind of a PvP kind of platform, and it works pretty well, and they make a fair amount of fees. Now Y2K is got a very low market cap, only $4 million, but a fully diluted of 42 million. But as far as I'm aware, this is going to take many years to become, in circulation. So really very low market cap. And if you scroll down here, they are making a lot of fees, and you can kind of have a look at this Dune dashboard and see some of the fees that they're making so far. Almost $1 million in fees, so almost 25% of their market cap they've made in fees in less than 6 months. So I think that's really interesting, and I think that's only probably going to grow as the total value locked increases. So yeah, I think Y2K seems pretty undervalued for me. They also received around $1 million of ARB from the Arbitrum emissions that went to all the different protocols. So I mean, in terms of a platform, given what it offers, the fees that it's making, its treasury, I think at $4 million market cap, it seemed pretty attractive to me. And yes, it has gone down a little bit. I think I did buy it around $5 million market cap, but these fluctuations don't really matter at such low valuations. This could easily go to $3 tomorrow, and vice versa. It could also go to $1 tomorrow. If it did go to $1, I'd probably be adding a lot more to my position. So that's pretty much why I've added Y2K. I think I also wanted some exposure to, a bit more exposure to Arbitrum. I did sell some ARB that I did receive, but I kind of have indirect exposure via Y2K now as well. And I think, we're slowly kind of accumulating some of the solid altcoins that I really enjoy and like. So I'm happy to see that, and hopefully going to continue to accumulate more here. So I hope that made sense. I mean, there's not really much more to it. You can go through all of the different metrics here, but to me, Y2K is a really nice platform. It's something that I use, and I like to invest in things that I use. And because they make fees, they make solid revenue. I'm happy. And I think they've got a solid team, and they continue to innovate, and they've got more products coming in the near future as well, hopefully. So I think things look good for Y2K. The last thing in this episode that I really wanted to talk about is basically portfolio allocation. And I've just opened this notepad up and basically just written some of the different categories in crypto that I want to basically allocate towards. And ultimately what I'm doing here is picking the winners of each of these categories, and hopefully this gives me a balanced portfolio overall. And we're going to just briefly go through them one by one, and if you guys are interested, I can go into a lot more detail in future, you know, just covering some of these different categories, the altcoins that I'm looking at in each of these categories, because they will change over time as fundamentals change, and things in crypto change very quickly. So this list is going to become very outdated in a matter of months, really. So I think the main category at the moment I would like to allocate towards is the layer 1, layer 2. I think block space is the most valuable thing in crypto, and there's lots of players in the game. We have Ethereum, Polygon, Arbitrum, but we also have a variety of other layer 1s and layer 2s like Solana, Phantom Avalanche, and then the layer 2s with Optimism, ZK Sync. We've got Polygon, ZK EVM, Starknet, and many others coming pretty soon as well. The question is really kind of which of these do you think block space has more demand? Well, I think it's pretty easy for me as a power user of DeFi to basically say that Ethereum is going to be one of them. I think Arbitrum also has shown that is probably the most promising layer 2 around at the moment, with the most interesting use cases and applications around. And then Polygon, again, I've done a deep dive on Polygon, and I think it's an interesting one for sure. I mean, you could argue that Solana could have a comeback. Phantom still has some applications. Avalanche does as well with the likes of GMX. Optimism is a favorite of mine, and we do have the rise of ZK rollups now with ZK Sync too. So it's going to be really interesting to see which of these is going to win. I think for me it's pretty easy to hedge my bets on Ethereum, but we're going to see kind of which other ones. But these are the main ones that I think are probably worth looking at. There are, of course, hundreds of other layer 1s and layer 2s, but most of them I'm not particularly interested in. Now, DeFi is going to be the core of my holdings, and that's because I'm most familiar with it, and I believe it is probably one of the largest elements of crypto as a whole. And what I've done is I've basically separated DeFi into a variety of other kind of categories that we can see here. So we've got stablecoins, liquid staking derivatives, governance, options and derivatives, perps, DEXs, lending, and then a few others with real-world assets, synthetics, and NFT finance. And with stablecoins, I think, yes, there's lots around, but I think ultimately we're going to see lots of competition this year, and I think generally over time, especially following USDC's bank run, we had the Silicon Valley Bank issue. I think we're going to see a variety of stablecoin providers coming into the space. One of them being Frax. FXS is one of the largest holdings in my portfolio, and I'm sure you understand why. If you don't, watch my videos on Frax. You'll learn everything that you need to know there. I think stablecoins are also going to be big on other platforms as well. Curve coming up with CRV USD. I think ultimately that means Convex and Conic are ones to really watch. We've got Liquidity with LUSD, which is probably the most decentralized stablecoin around. OHM being a stable asset, you could say. We've also got Aave, I guess, with GHO coming out, and of course Butterfly with Dinero as well. So stablecoins are going to be a big element of DeFi. I think stablecoins are probably the #1 product market fit of DeFi, or crypto I should say, and I think we've got lots of players really in this category, and you can see that I'm basically hedging my bets at the moment with FXS. But ultimately I think some of these other ones, I've got Butterfly in my portfolio as well. I'm looking at accumulating OHM. So yeah, we've got a variety of things to look at here. Liquid staking derivatives, again, I've got FXS with their Frax ETH and staked Frax ETH products, but there are lots and lots of other LSD products now. We've got Lido and Ripple being the #1 and #2. Rocket Pool, sorry, I should say. And then we have kind of Zero, which is like a liquid staking derivative self-repaying loans protocol. We've got Pendle doing some interesting things, and there's many others as well. I don't want to make this category too big, but yeah, again, you can see that I'm hedging my bets with FXS here. In terms of governance, I think governance in DeFi is going to only grow really. And Butterfly with their hidden hand product seems to be the most interesting to me, and of course is bringing in real yield and real income. So I only expect that to grow. I mean, the governance with the VE token model is pretty big with the Curve, Convex, Conic protocols as well. We have Aura and Balancer in the play, and Velodrome as well, which is doing amazing on Optimism at the moment, the #1 protocol on Optimism. So governance is a big category that I think is going to grow, and I'm hedging my bets here. In terms of options and derivatives, at the moment in my portfolio I've got Laro. It's down quite bad at the moment, but we have a variety of other options, and I think some of these I am looking at as well. If they, in my opinion, offer better products and better tokenomics, then I will mention this before, I will rotate, and I'm waiting for IVX. I'm really excited for that. And there's lots of new derivative products like Y2K, which we just talked about, offering these risk versus hedge on your stable assets. We've got IPOL, which are interest rates derivatives, and there's so many others as well. I recommend following 563 DeFi on Twitter, sorry, because he has a variety of threads talking about some of these various derivatives, and lots of alpha there. So definitely go follow him. In terms of dexes and perps, we've got the main dexes: Uniswap, PancakeSwap, Trader Joe. There's many others as well. I think the perps as well with GMX, Gains, LVL as well. I don't have any exposure to any of these at the moment, but I think it's something that I definitely have my eye on, and definitely I'm learning more about, especially with some of the modeling. We've seen how good things like Uniswap v3 are. So again, this is just another area of DeFi that I've got my eye on. Lending is obviously a big element of DeFi. Aave is the GOAT at the moment, and Aave is winning that. But we have Gearbox with kind of one of the safest lending elements in DeFi. Radiant with the cross-chain lending. FXS with products like FraxLend. Another category that I don't have too much exposure to just yet, but it's something I'm keeping my eye on. We have real-world assets, and there's lots of stuff going on here, which is pretty exciting. Synthetics, which I've always been interested in. Look at my videos from 2 years ago. And a new category, which I think is not really spoken about too much, NFT finance. I think this is going to be big, and I need to hedge my bets on this pretty soon. So expect some content on NFT-Fi pretty soon. I think NFTs as a whole probably should have some exposure to, just because it's such a growing area of crypto, and I think you're missing out if you're not really exposed to them. They have plenty of upside, and I don't want to fade them. And then infrastructure as well, so things like Chainlink, Arweave, and others. You know that I've got Link in my portfolio, and I think consumer-facing apps are probably more gain more traction and gain more value than some of these things that occur in the back end, which is probably why we haven't seen too much price action from either of them. But I think it's always good to have some stability, and I think these two are not really going anywhere anytime soon. So just ones to look at. I think it's always good to have some capital for new stuff. So there's lots of really exciting stuff coming out. We've got Celestia with the modular blockchains, Eigenlayer bringing new elements to staking, and kind of new exciting degen stuff like Chain as well, which I'll maybe make some content about in the near future. And then on top of that, the last category is really just having some stable coins to hedge, but also to earn some passive income with. And you know that I love passive income, so stablecoins are a must in my portfolio. So yeah, these are just basically the different categories, and I think basically if you're able to create a balance between them that works for you, everyone's balance is going to be different. I'm going to have a higher allocation to certain categories than others, but as long as you do have allocation and you pick the winners in each of these categories, I think you're going to perform very well in the next bull market. So let's see how things go. Of course, nothing is financial advice. Some of these protocols might not even exist in the future. You might get rugged. Who knows? But yeah, this is just some of the stuff that I'm looking at. There's plenty more altcoins that I'm looking at as well, and you'll see a lot of the stuff that I'm talking about on Twitter. So make sure you follow me there. Going back to the portfolio, we'll see that we are. If we just give this a refresh, we're up a little bit more. We're at $12,906. The last 24 hours hasn't been particularly good for some of these alts, but not to worry. We're in this for the long run. We're going to keep adding to the portfolio, and let's see how things go over the next few episodes. So this is episode 10. I hope you enjoyed. Make sure you smash the like button, subscribe to the channel, and of course I'll be back with plenty more content in the near future.